Good morning. You are watching daily live daily market outlook for Friday, 15th of June 2012. Quite a dramatic situation in the markets as all eyes are turned towards Greece and their Sunday's elections. That is seen as day D for the world economies and the markets. Already the central banks are preparing to combat Greek market storm in case of a negative outcome, and the world economies are also preparing for a possible panic after a Greek poll. There are two options, basically well known to everyone, either the continuation of the austerity plan agreed and established by the previous government, or in case of voting for the leftist parties that actually won the previous elections but failed to form the government, that are strongly opposing the current austerity plan and favoring Greece exiting Eurozone as a monetary union as well as a bloc of European countries. That will be the first time in the Euro era in that one country will be leaving the bloc, as this might also have quite big consequences on the European as well as world economies. The central banks from major economies are standing ready to take steps to stabilize financial markets by providing liquidity and preventing a credit squeeze if the outcome of Greek elections on Sunday causes tumultuous trading. G20 officials said. A senior official, U.S. official cautioned that Greek elections will not provide the definitive signal on what happens next in the Eurozone debt crisis. But if severe market strains emerge after the unusual confluence of three elections this weekend, there are important polls in Egypt and France, as well as central bankers are on standby to ensure enough cash is flowing through the financial system. G20, the central banks, are preparing for coordinated action to provide liquidity, said a senior G20 aide familiar with the discussions among international financial diplomats. His statement was confirmed by several G20 officials as central banks are preparing. Also, the world biggest economies are ready to preparing themselves for a possible panic action in case of negative, I would say, market negative outcome of Greek elections, as Britain announced it would flood its banking system with cash as the Eurozone's crisis casts a black cloud over the nation's economy, as well as officials from the G20 nations whose leaders are meeting in Mexico next week said that central banks were ready to take steps and stabilize financial markets. From Canada, comments that Canada is ready to act if the situation takes a serious turn for the worse or there is an external shock. The Bank of Japan left policy unchanged on its overnight meeting, following a two-day meeting basically, and keeping its financial firepower in reserve in case it is needed after the Greek election. China and India are both working on contingency plans, officials and sources said last week. In Europe, that will be first hit in case of any not wanted reaction outcome from Greece. Authorities also laid plans for tackling turmoil, such as if Greeks emptied their bank accounts should the Syriza party, which has promised to tear up the country's bailout deal with the EU and the IMF, score a decisive victory on Sunday. Syriza's leader Alexis Tsipras said that the memorandum deal with Greece's international lenders, which has helped to push the economy into a depression, would not last beyond this weekend. From France, President François Hollande warned the Greek voters about seeking what Tsipras has promised, a future in the euro, while ditching the 130 billion euro bailout deal sealed earlier this year and its demands for punishing austerity policies. Hollande said on Greek TV that he wanted the country to stay in the euro rather than reviving its drachma currency. Similar comment came from Treasury Secretary Timothy Geithner yesterday when he said that Greece leaving the Eurozone would be quite a bad solution, as United States, as one of the biggest world economies, need European Union, as they are one of their top partners, and anything that will happen in Europe that will further weaken the current crisis and deepen the current crisis, would of course affect the United States, and it's not wanted at this point. However, we are continuing as things are moving at its end of the week with some points, highlights of the past 24 hours, as Euro still holds steady ahead of Greek elections, while sterling lost ground this morning and dipped below 155 level after several unsuccessful attempts to clear 156 very strong barrier. Dollar is also in defensive mode against the Japanese yen after losing 79 support, threatening next level the strong dynamic support of 200 days moving average at 78.70, as well as dollar Swiss holding weak in the past couple of sessions, extending its short-term reversal of 97.69 with overnight's break below 95, handle seeing risk of further extension lower. Crude oil was supported yesterday and ticked higher above some important near-term barriers. The range top at 84 and tick above Fibonacci barrier at 84.51 after yesterday's meeting of OPEC left oil output limits on hold and doing nothing other than top producer Saudi Arabia will scale back supplies unilaterally soon in order to stem a $30 slide in prices, as Iraqi oil minister as well as OPEC chairman said a couple of days ago that good price for oil and suitable price for OPEC members should be around $100 to $120 per barrel, with the oil prices still holding well below $100. And basically due to the deepening crisis and a further slowdown in the major world economies, threatening a further draw in the demand for the energies, keeping this negative sentiment of the oil and pushing the price lower, and basically only action of reducing the production would be supportive and push oil price significantly higher at this moment. From today's calendar, we have a number of events due to be released. First, the comments from ECB President Mario Draghi, who said that Europe has reached a contingency where political decisions are predominant over the monetary policy decisions that are to be taken in the short term. The Euro system will continue to supply liquidity to solvent banks where needed, and the European Central Bank is not complacent when they say that objectives of 3 years LTRO have been broadly met. Supply side constraints of bank credit have been removed, and the full supportive impact of 3-year LTRO needed to be unfold. Further, from today, UK trade balance at 8:30 GMT for April sees a slight improvement. Gap is forecasted to at 8.5 billion sterling compared to 8.6 billion sterling gap of month of March. European employment change for first quarter is expected to stay unchanged at minus 0.2%. Eurozone trade balance at 9 o'clock is forecasted to show the trading surplus of 4.2 billion euros compared to 4.3 billion euros of March's release. From America's Canada starts with April manufacturing sales at 1230 that are forecasted to decrease significantly from 1.9% of March's release to 0.5%. Today's forecast, the U.S. Empire State Manufacturing Index for June also forecasted significantly lower from 17.1 of May to 13.6. Long-term purchases from U.S. at 1300 GMT for April are expected to show a more positive outcome. $45.3 billion is today's forecast compared to March's release at 36.2 billion. Capacity utilization rate for May, again from United States, at 1315 GMT, expected to stay unchanged at 79.2%, while U.S. industrial production is seen only gaining 0.10% compared to 1.1% of release from April. And finally, at 1355, University of Michigan data, consumer sentiment for June is expected at 77.5, below May's release at 79.3, while inflation expectations, no forecast, 3% is the release of May. We're going to take a look now at the markets and see the past 24 hours movements and the expectations for today ahead of the key events in Greece seen on next Sunday. As said, a single currency against dollar maintains its near-term positive tone of the recent low at 124.41 posted on 12th of June, as the pair broke above a significant barrier at 126 and 126.09, that is high of 13th of June, 2 days ago, extending gains so far to 126.45, just ahead of our next upside target, and the barrier at 126.67, last Monday's peak, 126.86 and 127.00 break above the descending trend line of 128.23 to through 126.67 at 126.25 zone, along with the still positive near-term studies, keeping the upside still in focus, and keeps the current consolidative action focusing higher, close to the upper boundaries of the recent near-term consolidation range that is limited the downside at 124.40 zone, and the spike high at 126.67 seen on last Monday, with break here required to signal the extension of the short-term rally, corrective rally and corrective upside action from 122.87 1st of June low. This will open basically the close break above 126.67 and 127, and today's close and basically weekly close above these levels will be a good signal for further extension higher, and we'll focus next significant barrier at 128.23, 21st of May peak. That will be our next upside targets. On the downside, immediate support at 126 zone, 126.13, 126.09 is reinforced by ascending trend line of 124.41 at 126.00. Basically, the previous strong resistance now is reverted to support, with the dynamic support of 55 days moving average at 125.82, and only loss of 125.40 high platform of yesterday would weaken the near-term structure and keep the our upside targets out of reach for now, with the clear break below 125.40 and 125.00 to turn near-term focus lower again. Daily structure of single currency is still in the showing positive signals as regain of bullish momentum, and the MACD pointing higher towards its trend line, the midline, as well as break above the main descending bear trend line of 132.82 keeps the focus at the upside, with the clearance of previously mentioned 126.67 and 127.00 to open way for a more significant correction of 132.82 to 122.87 down leg towards 128.23, 21st of May high, and just above between 50 and 61.8% retracement of 132.82 to 122.87 down leg. Sterling is losing ground despite being well supported at the downside, as failure on several attempts to clear 156 level, previous support now acting as good resistance, ticked several times during the past week, and the failure to break this level. And this morning, fresh weakness through the ascending trend line of 152.67 low. Now threatening a test of immediate support at 154.72. Basically, we lost also the 155.00 support as around the figure support level on this morning's strong move lower through the 155.27 trend line support, dipping so far to 154.75. Just few ticks of next very strong support, higher low of yesterday, and 38.2% retracement of up move from 152.67 to 156.00. Loss of 154.72 would be a direct threat for further extension lower, and focus will be turned to 154.50 as a next support ahead of a very significant and strong level at 154 zone. That is also close to 61.8% retracement, loss of which to confirm the lower top at 156, and then focus lower towards another very significant support at 153.20, 5th of June, higher low, as well as main bull trend line of 2009 low at 135.00 that currently stands at 153.21. To avert immediate downside risk, we need to see a gain of minimum 155.60, that is yesterday's high, with the more significant barriers at 156.00, and break and the weekly close above this level is to confirm further extension of the short-term corrective action from 152.67, and open next significant barriers at 156.40-50 zone. On the downside, loss of asset, loss of 154 to 10, focus towards 153.20, and 153.00 is round figure support ahead of a recent low at 152.67 posted on 1st of June, and yearly low at 152.33 posted on 13th of January 2012. Situation on the daily chart shows more negative tone, especially that recent gains and corrective action has been capped at 156.00, and current reversal lower sees risk of further weakness, loss of 154 basically to confirm the lower top, and then focus towards 153.20, 153.00, and 152.67. The dollar also lost ground against the Japanese yen after being congested several days under 79.80 and 80.00. That were our upside targets. With break below yesterday, we mentioned in our session 79.10, 79.00 near-term range floor, and the previous low of let's make it 79.00, 18th of May. And now being lost, extension so far seen to 78.77, just a few ticks above 200 days moving average, currently at 78.71. The main risk now is seen on the break below this level, as the near-term studies turned negative and broke below their midlines. That will see risk of break lower, and the possible extension of the downtrend seen on the break of 78.70, and the broken, the 78.00 figure support, and broken bear trend line, main bear trend line of 84.08, currently at 77.87. that will refocus the recent low at 77.65 and signal an extension of the downtrend of 84.17, 15th of March 2012 yearly peak, and confirm the lower top at 79.80. A negative near-term structure, and the current sees the downside still favored, with the current brief bounce higher seen on oversold hourly studies. Initial strong barrier is at 79.10, while only break above 79.50 would provide the near-term relief. However, clearance of 79.80 and 80.00 is required to turn the short-term outlook positive again. And finally, from the majors, Swiss franc remains in the near-term downtrend after upside failure at 96.50, just ahead of our key barriers at 96.56 and 96.75. Rejection here triggered a steady decline that dipped so far to 94.94 after yesterday an overnight break below the last barrier, 95.20 and 95.00, now threatening a full retracement of the near-term uplift from 94.77 last Monday's low to 96.50, Tuesday's peak, as the descending trend line of 96.50 keeps the upside limited for now, and the descending 20 days exponential moving average maintaining the negative tone. To avert immediate downside risk, regain of minimum 95.70. This is a higher low of lower top of yesterday, as well as to 55 days moving average on the 4-hour chart is required to be cleared in order to prevent further slide. Otherwise, more negative tone and further weakness would be likely scenario, and the break below 94.77 to open the next significant supports at 94.50 and 94.00, ahead of significant levels at 93.66, 21st of May, higher low, as well as 93.71, 161.8% Fibonacci expansion of the initial 94.77 to 96.50 ascent. A negative tone continues to dominate on the daily chart as the pair extends its corrective action of the latest up move from 90.41 1st of May peak that 1st of May low, that peaked at 97.69 on 1st of June, with the 38.2% retracement of the entire move seen so far, and studies pointing lower with loss of initial bullish momentum, seeing risk of further extension lower and test of levels previously mentioned, 94.50, 94.00 and 93.70 zone. As mentioned in the introduction, crude oil was boosted by OPEC's decision yesterday to keep limits of the oil production unchanged, but also left Saudi Arabia for possible unilateral action and decreasing the production in order to stem the current losses of the oil. Break above initial barrier at 84.00, that was near-term range top where the pair where the price was limited during the past couple of days, has resulted in a fresh extension higher through the next barrier at 84.50 that marks a 61.8% retracement of the latest downleg from 86.61 to 81.08, the low of 12th of June, with the still positive tone, more positive tone seen after a break above this significant barriers, with the near-term studies being in the positive territory, but slightly toppish at this point. For our chart studies see more supportive tone as the indicators broke above their midlines, and the recent a break above 84.32, descending 55 days moving average, that exponential moving average that currently started moving on the sideways. See potential of further extension higher. Short-term range top at 86.60 and 87.00 is our key upside barrier. This also marks Fibonacci 23.6% retracement of the broader down move from 106.41 down to 81.10 the 1st of May to 11th of June down leg, and they basically break above this level is to confirm the double bottom at 81.19, 81.10 and allow for a stronger recovery, with the next significant level seen at 88.24 and 89.00, 89.30 ahead of 90.82, 38.2% retracement. On the downside, the previous supports at barriers at 84.00 now act as initial previous resistance now act as the initial support, while break below 84.00 and 83.50 would weaken the near-term structure and keep the price action still in the sideways movements. And a quick look at yellow metal, that is near-term rally of its recent higher low at 15.55, posted on 8th of June, last Friday, basically, as the price continues to move higher and approaching initial barrier and strong barrier at 16.40. Significant was a break above 16.00, our first barrier that was cleared. 16.26 seen so far on en route to 16.40, and basically break above this level is required to improve the current structure. The current positive zone has been reinforced by breaking above 55 days moving average at 16.16. That was basically limiting the upside attempts in the past 2 weeks, and a clear break above 16.40 is to confirm the positive short-term structure and avert immediate risk of revisiting a critical 1530, 1520 support zone, and open way for some stronger recovery with dynamic barrier at 16.50, 90 days moving average ahead of static resistance important level at 16.71 and 16.79 ahead of 16.75, also the 200 days moving average, break of which is required to turn the tone more positive, as most of investors are turning back into gold as main safe haven instruments in current uncertainty about especially Eurozone. Further gains of yellow metals price are seen likely, especially after the verdict comes from Greece on Sunday, when we'll have some more clear picture of the future movements in gold and the other markets. That was all for today, Friday, 15th of June 2012. We will be back on Monday with the fresh news and the updates, and we hope that there will be no much negative impact on the markets after Greece releases their election results. We wish you a nice day today and a nice and relaxing weekend ahead of most likely stormy week that is coming next Monday. Good luck.